Very sorry about all that right there. I did not have the microphone on. I think the microphone is on now, right? You guys can hear me. If you can't hear me, just say something in the chat. Because, oh, you missed out on comedy gold that whole time that I was speaking. Yep. Always one little thing here. See, I'm like no professional YouTuber or anything like that. Yeah. Can't run the class on how to be a professional YouTuber because I do not know nothing about that there. Always one little thing that I mess up. So, allow me to start off today's stream like some of my colleagues in the streaming business on crypto. And how they started out? Well, let's see. Lark Davis. Everybody, hi, I'm Lark Davis. Crypto. What the F, man? I can't believe it. I should have just invested all in data center stocks. Yeah. No, I'm not Lark Davis. I'm George. Welcome to Cryptos Are Us. I'm George, and I'm constipated. We're all constipated. No, I'm not George. Or maybe I'm BitBoy. Welcome to BitBoy Crypto. Oh man, what am I gonna say? Cassie, get that cat out of here. What's my opinion on something? I don't even have an opinion anymore. I don't know why I do this here. I don't know why I stream anymore. Yeah, that's how it's gotten these days here on the BitBoy Show. That's exactly what his streams are like. I don't understand like how any of these other streamers have audiences anymore because one, all of their predictions have been 100% wrong. I don't know of any streamer that has ever made any sort of accurate call or anything that they've ever predicted has come to fruition. All right, how many times did you hear these guys say, "Oh, we are in a super cycle"? Super cycle. Ain't no super cycle. In fact, it was more like a bear market year more than anything else. But still, people are watching them. I mean, are we just so desperate to find something to watch? Is that what it is? Who knows? So, let's begin today's stream the way we always begin our streams here by looking at the most important things that kind of give you the temperature of the market, shall we? Let's see, we'll go over here. Oh yeah, I got to explain this meme here to you today at some point. And I got to answer questions that I was answering in the spaces last night, but our spaces got rugged, so I couldn't finish answering them. Let's have a look here at the market. Oh man, this looks horrible. Yeah, Zcash is performing, but everything else is sucking. And you might say, well, wait, I see a whole bunch of green on there. You got to look all the way over here to this column on the right, and you see it's been a very bearish year for just about everything except for a small handful of coins. Not looking great here at all. And you know what people are saying is, oh, we're supposed to get a Santa Claus rally. Where's our Santa rally? Because these are the same people that legitimately think, I don't know how they think this or why they think this because it's never been true, but they legitimately think that time tells markets what to do. Oh, we're going to get a Santa rally because we always get a Santa rally. We didn't get one last year. Well, forget that. It was an off year. Not getting it this year. Well, but we're supposed to. Just like how they think that next year is going to be this horrific, brutal, awful year where all we're going to do is lose money and go down 2,000% daily. And we're going to get beaten down badly. As a matter of fact, a bunch of boomers with their gold bars are going to hunt us down, break into our house, and beat us with their gold bars and say, you stupid crypto people, you dumb kids with your cryptos, you really thought you knew better than us boomers? We're the ones that screwed you out of the housing market. We're the ones that wrecked the job market for you, and you thought you knew better than us by investing in crypto. And then they do the stupid laugh that Ivan does, that So, it doesn't look great here today. And what I'm keeping the eye on here, though, is this World Liberty Financial, because that tells me what do the insiders think. And this thing's kind of been acting a lot like a stablecoin that just stays right here at the 12 to 13 to 14 cent range. As long as it stays in that, everything stays pretty stable. Ethereum, why do you continue to suck and embarrass yourself? Down 40% from your all-time high, down 11% for the whole year. What in the heck is going on at the Ethereum Foundation? Oh, yes, it's ran by a bunch of incompetent idiots that don't care about the people that invest in it because, oh, we're not about the money, we're about the tech. Really? Keep telling yourself that and use that as an excuse for like why your coin is performing so poorly. Like, imagine if it was all about the tech. I mean, shouldn't superior technology have superior performance? Well, clearly not. Because when you take a look at a lot of the chains that are being beaten down and kicked in the nuts all throughout this cycle, Sonic in particular reaching a new low. It was down below 7 cents earlier today. And even though it has superior technology to Ethereum, to Solana, to Sui, it's still suffering. Technology doesn't matter. And you know what else doesn't matter? And a word I'm so sick of hearing that when I hear somebody say it, I just want to punch them right in the teeth and knock every single tooth out the back of the mouth. Narrative. Narratives don't matter, you idiot. You realize that narrative is just a word that stupid people say to make themselves sound smart, because look at all of the positive, bullish news that came out this year, all of that good narratives, and it didn't do a darn thing for the price of any coin. So please stop using the word narrative. It doesn't matter. What matters is price action. First, the price action occurs, and then we come up with our own narratives about it later. Price precedes the narrative, and price action is all that matters. That's something that like really gets me hot, gets me angry, because I hear the word so many times, and you know that they're saying it just to sound smart. It's like, what do they even mean by it? Well, they mean story, and apparently it sounds more educated than the word story. Oh, yeah, by the way, alt season happened, apparently. Did you guys know that? You guys know that alt season already happened? I mean, that's what a lot of influencers and Twitter people are saying is, oh, yeah, alt season happened. Oh, it didn't happen for you. Well, that's because you were in the wrong coins. You do realize what alt season means is that it doesn't really matter what coin you're in because everything is going up, particularly when it's all paired together. But yeah, that's the new thing that these influencers are doing is they're posting this. They're saying, alt season happened. You just weren't in the right coins. Well, why don't you show me here on this chart, show me on the doll where you think alt season happened. Because look at the far right column where everything is down horrifically except for Zcash. Man, you could say privacy season happened. Yeah, because Zcash did well. Monero's done well. Even basic attention token has done well. Yeah, I buy that. Privacy season happened. But no, alt season did not happen. Will you stop acting like some idiot that's going, oh yeah, alt season really happened. You just weren't the right guys. Okay. Let's have a look here. Brace yourselves because it's not pretty, but let's have a look here. That's the pulse chain ecos. Well, actually, I expected it to look a lot worse. I hadn't looked at this for a few days right here. So I did expect it to look a lot worse, but man, it does not look good. No, in any way. Nope. Keep getting knocked in the teeth every opportunity that happens here. Hey, see, the real troubling thing is looking at this market cap, particularly for the incentive token. And you're going to realize that the market cap that they put there for the incentive token, I mean, market cap itself doesn't really matter, but that actually is closer to the actual liquidity on this chain. So it doesn't look good. And you keep seeing the despair being posted all around X. Everybody's saying, oh, it's worse than ever. The RSIs are at all-time lows, which is true, they are, for the others and the altcoins. And it's really hard for a lot of people to look at this here, and I completely understand, because you're seeing the stock market looking like it's doing very well. You're seeing gold and silver and now palladium, platinum, and copper. Copper finally started going up. All these things look like they're doing well. And people are thinking, oh my gosh, the Fed printing money and every other asset is going up except for crypto. It keeps going down. I guess money printing isn't what causes it. That's going to be the story going forward. The narrative. That's going to be what everybody's going to say going forward. It's like, money printing doesn't help crypto at all. They're like, you are so sure that money printing is the reason all this other stuff is going up? Are you really sure about that? And if so, why and how? Because I can point to a gazillion other reasons as to why gold and the other precious metals are going up. I mean, copper, finally, the reason why copper is finally going up is because economic activity is picking up and it requires lots of copper. It's a piece of raw material that is used in industry. So it makes sense that if the economy is starting to turn around like it should be, especially next year, we expect the economy to really, really turn around. If it turns around, the price of copper is going to go up. That's fully expected. And oil as well will start going up a little bit. I mean, it's down very, very low, which, hey, we like that for our gas prices. But that doesn't really tell us much about the health of the economy other than, hey, the economy don't look good. When the oil price is where it's at, and then the gold price is as high as it is right now, that's telling you the economy sucks. So they all think that it's about Fed money printing when the Fed is only printing enough money to add 1% to the money supply here in the United States. And then we got to remember, crypto is a global asset. So if it's only adding 1% to US M2, how much is it adding to global M2? Not even 1%, like a very tiny fraction of it. So right now, the Fed money printing that's going on is just not enough to matter. That was one of the questions I got asked last night that I wanted to answer here. So we'll cover that. There's 3 questions I got to remember to answer tonight. And if I miss any of these, you guys got to hold me accountable and yell at me in the chat there. Why is there a decorrelation between money printing and crypto, even though there's not? How much money printing is needed to get crypto going? And then who is it that is correct? Is it Benjamin Cowan or is it Julian Biddle? Because they seem to have different opinions on, is 2026 going to be a bull market or a bear market? So we'll answer those 3 questions today. Let's go back to looking at our usual things that we look at here. How did stocks do today? Let me refresh this. Imagine they did pretty good here today, right? Because it was a short trading day. Market was only open till like 2 p.m. And it's loading. Come on, load. There we go. Yeah. S&P at 69.32. Good day for them. Now, how about the bond situation? What are the bonds doing? All right. The Japanese 10-year is at 2.05%. Oil went up a tiny bit. Really haven't gotten the numbers in here on gold. Because these are from last night. So they haven't really been updated yet. Interesting. The yen is getting a little bit stronger. A little bit stronger here in the yen. Not that much, though, so it's not something to worry about. We really want the yen to kind of hold its place right here at 155. Because you see, if it gets weaker, that will involve intervention from the Bank of Japan. They will intervene and strengthen it. And as the yen gets stronger, that means that all of the money that is owed back in yen-denominated debt due to the carry trade, the yen carry trade, all that debt repayment is going to be a lot more expensive to the debtor. And they're going to end up selling a lot of assets to cover those debts. So we don't want the yen to get strong. We also don't want it to get too weak to the point where the Bank of Japan wants to step in and make it strong. We want it to kind of stay right where it's at. Now, any important stories here in TradFi land on CNBS? Don't think so. Let's see. Crypto exchange Kraken plans to offer prediction markets. Another one. Like Coinbase was already kind of gravitating towards stocks and prediction markets. Now Kraken wants to do it. What that tells you is that they're not making a lot of money on crypto trades because you're not making a lot of money on crypto right now. So they got to do something else to make money in their business because these companies, they have to grow. They have to produce growth and profits to their shareholders and stakeholders. So don't read too much into it thinking, oh my God, it's all over because the exchanges aren't even doing crypto. No, they're just doing what they can to stay alive during bearish times. All right. Dollar index, not too much change here today. It has breached the 98 barrier and is down below 98 and into the 97s. Need it to fall a lot further and a lot faster for us to have like any positive news coming from the DXY. 10-year Treasury is down, but not by much. Right. So nothing to see there is basically the deal. So let's talk about some of these questions that we had here. Is the decorrelation between global money printing, or what they call global M2, and Bitcoin. I've said this a zillion times. I've said it so many times here, I'm almost tired of saying it because there's not a shred of truth to it. Let me dig up the chart here. I already debunked this, I think, on the last stream. I've got to debunk it again, apparently, because the people just refuse to get it. And when I say the people that refuse to get it, I'm talking about like all the people that are constantly posting this chart and going, oh, global M2's going up, but Bitcoin's going down, so there's just no correlation between the two of us anymore. Oh, it's all over. And it's easy to feel that way because what you're seeing happen right now is something none of us expected to see, and something that like really we should not be seeing. What we're seeing is the rest of the markets, many other kinds of investments, such as stocks, precious metals, they are all going up. Meanwhile, crypto is the only thing that's going down and not performing very well. And that's such an odd thing to see because typically the thing that makes all assets go up, the rising tide lifts all boats. That's what we would be expecting to see, but we're not seeing that right now. And that's because there is not a rising tide. There is not a massive amount of money printing going on all over the world that is causing all these other assets to go up. But for some reason, crypto is not going up because, well, we're all like Peter Schiff now, and we all realized, oh, yeah, this whole crypto thing, it was fun while it lasted. But it turns out it was really all just a big bunch of crap, and none of it mattered. And, oh, he was right all along. We should have listened, but no, we didn't listen. I'm having a tough time finding the chart now. Why am I having a tough time finding it? Like, it was all over the place. Like a gazillion people were tweeting it like 15 times a day daily, and now I can't find it. Bear with me here. I know I responded to it, but let's see. Oh, and as far as like a bear market coming next year, man, do I got a lot to say about the people that are telling you, oh, bear market's inevitable. 10-6 was the top. I'll see you in a whole nother year. Always having to speak about that. Always having to address it in every single one of those. Okay, here it is. I finally found the chart that I'm talking about. It took me long enough. All right, so this chart is the one that you're constantly seeing here about detachment from global liquidity. Now, this isn't global liquidity. Here's Max Crypto. No hate on you or anything, but he's typically not a very literate person. Well, you know what? Yeah, there is hate because I already called him an idiot because I've debunked this a gazillion times. This is global M2. That is not the same thing as global liquidity. See, M2 represents dollar bills that have been printed and are immediately available for either extraction in the form of physical dollar bills or available to invest in things like stocks, bonds, crypto, whatever. All right. It's money that we can easily get to. It's accessible. It doesn't include credit creation, which is where a lot of liquidity comes from. I mean, we talk about money printing. The real money printing comes from credit creation or from debts. So this chart already is incorrect as far as how he labeled it. The second thing is this chart is also incorrect in this sense, and that is it does not properly account for currency exchange rates. When you properly adjust for currency exchange rates, such as going from the Chinese yuan to the US dollar, because they're not one for one, when you properly do that, you will find that the relationship between Bitcoin and global M2 is entirely intact. Further, I'm one of the people that say you should not count China in global M2 because China's money printing does not go into financial assets. It goes into real estate and their industrial economy. So, including their money in the head count of dollar bills that should make up global M2, that would be like counting Catholic nuns in the head count of sexually available women. All right? I've debunked this a gazillion times, but still it persists. They're constantly posting this because they want to look like, oh, I broke the story. I made a good point. No, you didn't. All right? You're stupid. So please stop. That was the first question I wanted to answer. Why the decorrelation? So really, when you look at it, the amount of money printing that is going on right now, the money printing that matters, which is being done by the Fed, it's not enough to matter. That is problem number one, because they do the $40 billion a month for the next 6 months or till April. Still, it's only enough to add 1% to the overall money supply in the United States, less than 1% to the money supply in the world. That's just not enough to matter. Now, I do think they're going to have to print a lot more, particularly as the new year rolls over. There's going to be a ton of money printing that's going to need to be done because of how much debt needs to be rolled over and refinanced. We'll talk about that a little bit later here, but the amount of money printing that's being done right now is just not enough to matter. How much needs to be done for it to matter? I mean, I think that if you did $2 trillion a year, we would notice it on the charts. If you did, because that'd be like 10% of U.S. money supply. If you did $4 trillion a year, that would make a huge difference in all financial markets, particularly crypto that has the lowest amount of liquidity. So if they printed $4 trillion next year, which I think is a very real possibility, you would notice it because you'd be tempted to screenshot your portfolio as opposed to taking profits. All right? So don't be given into despair here, thinking, oh, money printing no longer works. It's not whether the money printer is on or off that matters. It's how much money is being printed. I mean, if they just print $1 bill, is that going to do a damn thing? No. Not in an economy that is trillions and trillions of dollars. Not when all worldwide assets total up to the amount of 900 trillion. Not when the global debt market is $346 trillion. Please, don't let the idiots on X gaslight you or provoke you and make you think, oh, it's all over because, they're printing money and it's not helping. All right. And the next question we heard here is Ben Cowan or Julian Biddle, which one is right? Because you see, Julian says that next year is going to be a great year for crypto as liquidity comes back into the system. Benjamin Cowan, on the other hand, he says, well, no, it's probably going to be a bear market year. Now, I respect Ben Cowan. I would not make fun of him like I make fun of the other idiots in this space. I make fun of Ivan because he's an absolute idiot. And he doesn't know what the heck he's talking about, but for some reason he's been endowed with like this great authority. Like he's a very stupid person, incredibly stupid young man. And if we ever streamed, if I ever had a conversation with him, I would expose him for what a stupid boy he is. Benjamin Cowan, on the other hand, is not stupid. He is a very intelligent man. And What I uh, what I love about Ben Cowan is he's kind of like he reminds me of Sheldon Cooper, actually, like the way he looks, the way he talks, and everything, and his intelligence. All he's actually the Sheldon Cooper of our space. I got a ton of respect for Ben Cowan. I know that he is a 4-year fundamentalist and believes that next year is going to be a bear market, most likely. He is willing. He said, "Well, I'm willing to be wrong on that. I'm willing to rescind that opinion if the data proves otherwise, if the price performance proves otherwise. I mean, if we hit a new all-time high at some point next year, all of this 4-year cycle bull crap goes away, particularly from the people that are peddling it the hardest." But here's the thing about Ben is that he says, well, it's debatable right now if we're currently in a bear market like 2022 or if we're going to be in a bear market like 2019. Because what's happening right now is we're repeating much of what we saw in 2019. Let me show you exactly what he says here. You see, sometimes there's bear markets that are born out of capitulation from euphoria, but then there's also bear markets that are born out of boredom. And that's what we had back in 2019. Let's see, where is it on the chart here? All right, I'm going to try to zoom in here. Okay, yeah, this is pretty good. Zoom in a little bit further. All right, so we take a look here at this. I mean, look at all this sideways action from July 2000 or June of 2019. Look at all this sideways action that occurred all the way to September. And then in September, things got pretty bearish. Now, what you also might remember is that by September of 2019, something else was going on that's particularly important, known as the Federal Reserve's balance sheet. Let's see, where did I... Let me pull that up here for us to look at. Balance sheet trends, so we can see how was the Federal Reserve's balance sheet behaving, what was the money printing situation like at the time, and that is this part right here on the chart. So September, it basically bottomed out when they got it down to 3.7 trillion. They turned the money printer back on, but were incredibly sparing with the amount of money that they were adding to the economy. I mean, here it just goes from 3.769 to 3. Basically 100 billion was added in a week. And that was pretty much how it went, 100 billion a week. And even while that was going on here, I mean, this went from, September to January of balance sheet expansion. It's not quite quantitative easing. It's just called balance sheet expansion. And I'll explain why that is. But when you take a look at that, man, how did Bitcoin perform throughout those 6 months? I mean, or 3 months in this case. How did it perform throughout those 3 months? Not great. You saw pretty much a divergence here, starting with this drop right here in September. This is after the first 100 billion was printed and added to the balance sheet at the Fed. We have a drop that occurs the following week. Why is that? What's going on there? I mean, 100 billion is not enough to matter. I mean, that's certainly not the case. I mean, 100 billion, particularly back then, when the balance sheet was just 3.7 trillion, 100 billion was certainly enough to matter. So it's not that the amount of money being printed didn't matter, but they had this divergence going on here. And why was that? And it continued all the way through January until, finally in January, we started to catch a bid. Zoom out just a little bit more here, and you can see it was beginning to go up, and it was going to have a normal good year for Bitcoin. Yeah, we had some sideways action over here, but still, it looked like it was ready to go up and start doing good, back up to almost $10,000, and then the pandemic hits, and it takes a dump down all the way to price gets cut in half practically. So what was happening here? Why did it take 3 months for it to get its act together? what you got to remember is when you've experienced negative price action in a particular asset for a while, people get the wrong idea about that asset. It's called recency bias. I mean, the way I look at it the exact opposite way here. Like, say a convenience store in my neighborhood was robbed at gunpoint. A lot of people would get the idea to think, well, I don't want to visit that convenience store then because it just got robbed and it may be an easy spot for criminals to go to. My thought is the statistical likelihood of getting hit by a criminal the very next day or the very same week or month is very unlikely. So that's probably the safest convenience store to get into, to get anything at. You know, just like how an investment that goes down 50%, that has 50% of the risk taken out of it. That doesn't mean you go catch a falling knife or anything. That doesn't mean that. But the best way I can put it is like this here. You guys have seen what Disney has done to Star Wars, what Disney has done to Marvel. And you think to yourself, like, all of the releases that they're doing to try to keep those brands alive is not helping them. I mean, the crap that they just produced, like Last Jedi, Rise of Skywalker, all that crap, and The Acolyte, that has left such an incredibly bad taste in the viewer's mouth that they're not interested in going to see this new Mandalorian and Grogu movie, which sounds incredible, like an incredibly stupid title. All right. What would do Disney very good is to just sit on Star Wars for several years, wait 5 years, and then come back to Star Wars and release good stuff. All right? Because even when they release good stuff like Andor, it doesn't help them. It didn't get a lot of viewership. Same with Marvel. They're trying to keep this brand alive that people have already told you that they're done with. The best thing they could have done for 2025 is not release a single movie, but instead they released 3, and all 3 of them were bombs. The Captain America, the Thunderbolts, and Fantastic Four. They released all that crap, shoving it down the people's throats, reminding everybody, hey, we're Disney, Marvel, we're here, we're releasing stuff that sucks instead of taking our time to write something good and release it a few years later. All right? Had they just stayed absent, as absence makes the heart grow fonder, they could have came roaring back a year or 2 later, but they chose not to do that. Well, the same thing kind of has to happen here with crypto because so many people got burned this year, particularly when everyone was saying that we're in a super cycle and 2025 is just going to be this unbelievably good year where everything lines up because we got a crypto president, we've got a crypto-friendly SEC, we've got ETFs, we got all that stuff. Yeah. But it didn't happen. It didn't materialize into a good year. So lots of people got burned. And lots of people also burned themselves doing stupid stuff like using leverage. Got no sympathy for you leverage losers. It's going to take some time for all of that negative sentiment that was created by how horrible this past year was. It's going to take some time for all of that to be forgotten about. All right? That's what's going on with crypto, particularly here on the chart for 2019. Even though the money printer got turned back on, it's still, Bitcoin was grinding down for about 3 months. Same thing is happening right now. Now, I think this time is going to take 6 months. 6 months starting next year, the turn of the year. It's going to take 6 months before all of the recency bias is forgotten about, before all of the negativity, almost said a bad word. Try not to say bad words, particularly on the Christmas Eve stream here. Before all of the C-effing, if you know what I mean. Yeah, there's a phrase that Richard told us that's cry effing, right? Yeah. So before all of the Corey Costa behavior is washed out, I think it's going to take 6 months, all right? That's what I want to call you. I'm going to call it Corey Costa-ine. Now, some good news here. A few good things is that when we look at that's how it acted for Bitcoin. But what about Ethereum? How did Ethereum do during that period? Well, I think it actually fared much better than Bitcoin when the money printer was being turned back on. So let's see. Let's go to 2019 here. How did it do? Well, or actually, no, it didn't. It did the exact same thing. It actually continued to grind down. But with Ethereum, the good news was it was going up like Bitcoin. Man, here it went from a local bottom of $133 up to $279 before COVID, the pandemic came along and destroyed all that. But then, of course, money printer got turned back on and everything. So I think what we're experiencing here is a repeat of 2019 2019 exactly. I think we're experiencing a repeat of 2019 because what was happening in 2019 is a lot of what's happening today. The money printer just got turned back on, but we're still going down. Every other asset class out there is performing magnificently while crypto is sucking. We've seen this before. 2019, what happened the very next year? We had an amazing blow-off year. What happened the year after that? We had an amazing blow-off year. I think that may be in play this time around too, and so does Benjamin Cowan. He thinks that that is a possibility because monetary policy will be more favorable next year. The economy is more likely to be in better shape next year than it is now. I've said this a gazillion times. I'll say it again. Part of the reason why your coins sucked this year is because the economy sucks. We are not decorrelated from the economy because for your coins to go up, people have to buy them. For people to buy them, they have to have money. For them to have money, the economy has to be good. This year, the economy has not been good. Now, everybody's going to go, well, Q3 GDP was 4.3%. You know, a lot of that is just these companies with their AI capital expenditure spends. That's all that was. Now, next year, now that they got all the CapEx spent, they're going to have to put people to work. So a lot of jobs are going to need to be created. Next year can be a great year for the economy. Absolutely great year. And that's what we're kind of hoping and betting on when not just do we have lots of stimulus, lots of tax cuts going into effect, lots of regulations that are going to be in our favor, and just also the fact that like Trump should know he is in deep doo-doo if he loses the midterms, and he will lose the midterms if he doesn't fix the economy. Because the economy sucks. If he doesn't fix it, if he doesn't give out a bunch of free goodies and giveaways, such as the $2,000 tariff stimulus thing that he wants to do, if he doesn't do that, he will lose the midterms. And if he loses those midterms, impeachment is coming back, lawfare is coming back, and your enemies, Trump, they don't just want to make you a lame duck. They want to put you in jail. And they will do that if they win the midterms. And I'm sure he knows this. And that's why he's going to be doing all sorts of stimulus spending next year to try to bribe voters to come and vote for the Republicans and keep that from happening. All right. So is it Benjamin Cowan or is it Julian Biddle that is right? I mean, I think they're both right. The issue is that what needs to happen is we need to figure out, as we will early in next year, whether we are in 2019 or 2022. All right. Now I say, well, clearly we're in right now is 2019 because there was no euphoria, there was no blow off top, there was no parabolic run in Bitcoin, and because there wasn't any last minute piling in, that means we don't have enough people in Bitcoin to create the sell pressure that is necessary to sustain a year-long bear market. Because you see, that's why the bear markets have lasted as long as they last and why they go down as far as they go down is because of the parabolic blow off top that occurs at the end of each cycle, the top of each cycle. So many people piling in at the last minute, at the absolute wrong, worst time, that creates a ton of sell pressure. Because a lot of people buy the top, just like how last time Sailor bought the top, he helped make the top. A lot of people got piled in and helped make the top. And those people were the ones that were the first to start losing money when the price started reversing because earlier investors were taking profits. And because there were so many of these people, there was a ton of them that created that parabolic top at the end because there was a bunch of them and they all started dipping out one by one, not all at once, but in succession, kind of like a chain reaction. They were also then, they were also causing a year's worth of sell pressure that creates that year-long bear market we saw in 2022. And what else went on in 2022, though, was like, as they were selling, there was a lot of leverage idiots back then. Really hate you leverage people. But there was a lot of leverage idiots back then, and their longs got liquidated, which created those great big drops that we saw. The whole capitulation that really confirms a bear market. They were the ones that were, a lot of that was coming directly from levered longs. Now, what confirms a bear market, though? I'll tell you what I look at is stablecoin supply and stablecoin market cap. If both Tether and USDC go down in market cap at the same time by a significant amount, then I say, oh yeah, we're in a bear market. Let's see, chaotic creation. Oh, Johnny. Hi, Johnny. He calls it the Costa effect. That's a good name there, actually. The Costa effect. Maybe that's what we'll say there, because try not to say any words, any bad words, because a lot of people listen with their kids. All right. Yeah, there was something I wanted to share with everybody here, because there was a meme that I posted here about. Matter of fact, let me show you the meme. The meme I posted that references the TV show Game of Thrones. And let's see, where did I have that? I had that over here, right? There it is. All right. Well, that was the thumbnail for today. I mean, that is the thumbnail on this YouTube video. But where does it come from? Is this here, this thread that I made. So, we've got Cersei, and we've got Littlefinger, and they play different parts here. I mean, Littlefinger, I say he's the Fed, or he's Jerome Powell, and then Cersei, she's the Treasury Secretary, or Scott Bessent. And Littlefinger is saying, well, the Fed is independent, and we need to be disciplined hawks to fight inflation. All right, we'll come back to this. Let's just have a look here at the scene itself so you guys kind of understand what I'm referencing and what I mean by all this. Where'd I got that? I think I got that here, right? Oh, it's over here. All right. All right. Let's make sure that the sound is on, so y'all let me know if you can hear the sound or if you can't hear it.
Knowledge is power.
Seize him. Cut his throat. Stop. Wait. I've changed my mind. Let him go. Step back 3 paces. Turn around. Close your eyes. Power is power.
A very memorable moment in the show. Very memorable moment to me, at least, or it stood out to me here. And yeah, I was a big Game of Thrones fan for like the first 4 seasons, and then it went downhill. I do not like George R.R. Martin. I mean, his books are terrible, but the shows were great. Really, particularly like the first season of House of the Dragon. And yeah, I think that like Hex will be $1 million a coin before George R.R. Martin finishes his Song of Fire and Ice series. I do not like George at all, but I loved the shows that were based off of his books. So why am I showing you this here? What's the point of this here? Well, this is the conflict between the Federal Reserve and the United States Treasury. Like, which of the two actually run the economy or determine the direction of the economy, at least? I don't really want to say, it's not accurate to say that either one of them controls the economy or runs the economy, because interest rates in particular does not control the economy. It reflects the economy. The money supply in particular does not control the economy. It reflects the economy. But who has the real power over those buttons on the levers or the ability to print more money or reduce interest rates? Because I think what you guys probably wondering here, whenever I do a coverage of live coverage of the Fed presser after each Fed meeting, you probably notice, like, Jerome doesn't really seem like he wants to be doing what he's doing. He doesn't seem to act like he wants to cut interest rates. It sounds like he's grudgingly doing it. And he's trying to minimize the money printer as much as he can. Like the last Fed meeting where he talked about turning on the money printer, it really sounded like he didn't want to be doing it, and he wanted to minimize what people think about it, what perceptions they have. It was like, oh, it's just a tiny amount, and we're only doing it because of tax day is coming up, and we don't want any strain on the banking system when people pay their taxes, which is the most BS thing that he could have possibly said, because we've been paying taxes in this country for at least 100 years, and it just now became a problem for the banking system, especially when taxes were much higher last year. This year, the tax refunds are going to be higher, not the tax bills. So you're telling me that we're going to cause chaos to the banking system and a lot of strain on it because we pay taxes? No. It's a lame excuse, Jerome. You got to do better next time. So I explain what I'm saying here is that the Treasury is Circe, and the Treasury controls the country or the direction of the economy. And let's get back to that one screen here of this. So Jerome Powell is going to be kind of like Littlefinger and say, oh, well, the Fed needs to be independent. We're not political. We don't take orders from the White House or from the Treasury Department. And we really got to fight this inflation. And we're going to be data dependent. And we're only going to do what the data justifies. So Scott Bessent is hearing all this, and he's saying, no, bitch, you're going to... Did not mean to cuss, sorry. He said, no, you're going to do what I tell you to do. Sees the guards on him right here. He's going to be like, wait, how are you forcing me to print money? What about Fed independence? We should have power. But the truth is, the only real power lies within fiscal dominance. If Scott Bessent wants the Fed printing money, he will make the Fed print money. How is that possible? How is that the case? We can show you a few instances of it already here. The first one is this one. You're probably seeing a lot of postings on X about this here, where the repo markets are having lots of liquidity injections in them. They're buying up a lot of things like treasuries, these mortgage-backed securities. I'm thinking that the Fed wouldn't be going into mortgage-backs, but apparently they are getting into mortgage-backed securities again, which is great because now they're taking a lot of risk out of the market. But rather than bore you to death with how repo markets work, because you see, I imagine you probably don't want to fall asleep early at 6 p.m. on Christmas Eve here. I imagine that you are watching me, not because you want to be put to sleep, but because you want to be informed. So I don't want to go into the details and mechanics of repo markets because, one, that will put you straight to sleep. And then, two, if you're a person that is like most people and enjoys getting laid, your knowledge of the repo markets is not going to help you get laid. In fact, it will hinder you. Just tell your date, hey, you want to hear about the repo markets? And then you'll never have another date again in the rest of your life. You'll end up on the Facebook group. Are we dating the same guy? Oh, hey, it's the repo market guy that tried explaining to me how repo markets work. Oh, I can't sleep with him. Hell no. So instead, I got a much better analogy for you on explaining how Scott Bessent is going to force the Fed to print money. So here's the good news that I want everybody to take from today here. The good news is that it doesn't matter who is the next Fed chairman. If the FOMC decides to re-elect Jerome Powell, which they actually have the power to do, to enact monetary policy, it doesn't matter. If they decide to make it Lisa Cook just to spite Trump, it doesn't matter. Because the Treasury has the ability to force the Fed into money printing, which will make crypto go up. How does this work? What's the explanation behind all that? I will explain it to you with a very simple to use analogy that I have taken, or analogy that I used once before in my own book, which, hey, let me just show you a little commercial for it right now, and then I'll come back and explain it to you. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible. All right, thank you for humoring me for that moment there. What I wanted to say is, like, in the purpose of that book is that when crypto starts going up next year, which I believe it will, your friends are going to come back to you and be like, oh, hey, I'm so sorry that I made fun of you throughout all of 2025 for investing in crypto. I see that it's doing very well right now, and I want to get involved in it, but I just don't understand it. Can you help me understand it? And what you do is you say, oh, hey, well, I got this book right here that explains why it goes up and explains it to you like you're 6 so that you can understand it by using very vivid analogies. One of the analogies in that book is the analogy of a nightclub economy. And that's how I want you to, that's what I want to paint here for you to help you understand what's going on with the Treasury, the Federal Reserve, the repo markets, and the money markets, so you have confidence and understanding how, why, and in what way the money printer is going to get switched on and why it's going to make your bags go up. All right. So here's how it's working here. Imagine, if you will, a nightclub. How would we run a nightclub? What are some things that we need? I mean, we need a dance floor. We need a bar. We need bouncers and a velvet rope to keep people lined up outside the door. But the two most important things that we need at the nightclub is going to be hot girls and thirsty dudes. All right? Because I don't know if you're as old as I am, if you remember the 90s, and the 90s was great times. It was before dating apps, and when you wanted to meet some romantic options, what you did was you went to a nightclub, which, looking back on now, is actually pretty terrible, but way back then it was good because at least it got us out of the house and it got us active and not sedentary. And there wasn't a gazillion options and a bunch of creeps flooding your inbox with nasty pictures, and there wasn't any catfishing or fat fishing. So it has there's no real solutions. There's only trade-offs. I'd definitely go back to those days. I'd trade off for those days. But at the nightclub, what you need to have harmony in a successful club is for there to be a balance between hot girls and thirsty dudes. We need the thirsty dudes to come in to pay the cover charge, to buy the drinks, spend the money, keep the club in business. We need the hot girls to get them in the club. And if we don't have a balance, we're going to have problems. Like, for one, if you have way too many thirsty dudes plowing into the nightclub, well, then you're going to have dudes fighting over the same girl because there's not enough girls for all the thirsty dudes out there. And then some guys are just going to get up and leave, be like, hey, this place sucks. It's a sausage party. So they leave. And that's less money that we make now. Now, the opposite is also true as well. Like, if we have too many hot girls in there, some people are going to think, well, that's a great problem to have. Not necessarily, because what's going to happen in that case is, one, we don't even have enough guys to keep the club afloat and make money off of. But then, two, a lot of these girls might get pretty upset that there's not enough guys for them to choose from, or they're going to have to end up sharing a guy. They're going to have to get into a limousine with this guy that's taking them home with 5 other girls, and they're not going to like that. They want to feel special. They don't want to feel like they're part of a harem. So we have to have a balance. Now, in this analogy, the nightclub is a money market or a repo market. The hot girls are the treasury bills. The thirsty dudes are the dollar bills. There needs to be enough dollar bills to buy the amount of treasury bills that is being flushed into the club, all right, or flushed into repo markets and money markets. What Scott Bessent is doing is that he is financing most of the U.S. government through treasury bills. And the reason he is doing that is because what do these treasury bills do? I mean, what's their purpose and everything? They go into money markets. They go into repo markets. When you put money into a savings account at the bank or even a checking account, the bank takes your money and buys treasury bills. All right, that's how they have the interest. That's how they get the interest to pay you interest on your deposits. So when we have too many of these T-bills, well, what happens is the price of each T-bill goes down because too many T-bills chasing too few dollars means in order for all these T-bills to get bought, they have to reduce their prices. That can cause problems because then if the price of the T-bill goes too low too fast, it could effectively zero out and cancel any interest that it was going to earn for you if when it's a T-bill that you already hold. All right. Because, suppose, maybe kind of put it like this here. If you're staking your hex and you're earning 40% on your stake for the year, but the price of the coin went down 40%, did you make a gain? No. What if it went down 90% in that year, even though you were earning a 40% on the stake? Did you make a gain? No, you got a loss. Well, same thing can happen with T-bills. You got too many T-bills chasing too few dollars, well, then the price of those T-bills has to go down, and it can go down far enough to cancel any yield that it would have earned, causing a net negative in the money markets, in the repo markets. When that happens, you could have a panic. It could inspire a bank run, or it could inspire just a lot of people pulling money out at the same time because they're afraid that the money they deposited is no longer safe. This is kind of what happened with Silicon Valley Bank, except it was with long-term bonds instead of T-bills, the short-term T-bills. So this can cause chaos. How do we stop that chaos? The Federal Reserve prints money and prints enough money to buy those T-bills to create a balance between dollar bills and T-bills. That way, you don't get that chaos of prices going down, and now we got negative returns on money markets, negative interest on savings accounts. And the way they measure it really is with the secured overnight financing rate versus the federal funds rate, and then versus the IORB, or interest on bank reserves. Again, that's really deep in the weeds stuff here. I think that the nightclub analogy is easier to get, so we don't want to get too deep into the weeds on it. But the reason the Fed is printing money, even though they don't want to, and they believe inflation is still a problem, the reason they're doing that is they have to create a balance between T-bills and dollar bills, make sure there is enough dollar bills in the system to buy up all the T-bills that Scott Bessent is issuing to finance the U.S. government debt. All right. T-bill, by the way, it's a treasury bond, but it's a very short-term one. It's 1 year or less. Now, the majority of the debt and the borrowing for the U.S. national debt is being financed with T-bills. And it's fine for right now because not too much debt matured this year. Not too much debt needed to be refinanced and rolled over. Next year, though, is a different story. We've got what they call the maturity wall, meaning about $10 trillion, or pretty close to it, of the United States' national debt, marketable debt, is going to mature, and it has to be rolled over and refinanced. They're not going to pay off that debt. All this talk about using tariffs to pay off the debt, that's not going to happen. I mean, one, they're not collecting enough money from the tariffs to do it. But then two, paying down the national debt is actually going to hurt the economy because you're reducing the size of the Treasury market. And with a reduced size of Treasury market, well, then other markets are going to have to reduce as well to remain in proportion for the way that treasuries are used. Because a lot of portfolio managers, mutual fund managers, endowments, and grant funds, pension funds as well, they use treasuries to offset risks that they take in riskier markets like stocks. So if you're reducing the size of the treasury market, you're reducing the amount of available treasuries and safe hedges that these portfolio managers can use to take other risks. So by reducing, paying down the national debt, you would actually be discouraging people from investing in stocks, which they don't want, and investing in real estate, everything, you name it. All right. So they can't do that. Can't pay down the debt. What do? They issue new bonds or new debt to refinance the old debt. $10 trillion worth of debt matures next year. What's Scott Bessent going to do? He's going to refinance the maturing debt with T-bills. So we may see $10 trillion worth of T-bills getting flushed into the system. That will require the Fed to print an enormous amount of money to maintain the balance between dollar bills and T-bills. And because that money that they're printing is going to be used to stabilize the banking system, it's going to be used to buy bank reserves, it's going to be used for money markets, that's going to create a lot more liquid cash money or liquidity that will eventually find its way into a financial asset. All right, and they're going to need to print a lot of it for the amount of debt that matures needs to be refinanced next year, and for the amount of chaos that it would otherwise create in the banking system and in the money markets if they don't. So if they don't do it, they'll crash the economy, and after they crash the economy, they'll have to have an emergency meeting and start doing it. So that's how it works here, and that is how the Secretary of the Treasury, Scott Bessent, he's Cersei, and he's telling Littlefinger Jerome Powell, I got the power, all right? That's fiscal dominance. You're going to do what I say, whether you like it or not. And the same is true of the very next Federal Reserve Chairman and the very next Federal Open Market Committee. Whoever sits on that committee, they will have to do what Scott Bessent tells them to do. So it doesn't matter so much who's on that committee, and it doesn't matter who the Fed chairman is. I mean, even if it's Kevin Warsh, who's very hawkish, he will have to turn on the money printer because of what Scott Bessent is doing. All right? So that is why I think next year is a much better year than this year was. That's why I think next year is going to be everything that we hoped this year would have been, is specifically because of the fiscal dominance finally coming to fruition. A few other things right here, just to give you a little bit of hope. If you got questions, get them in now because we're about to wrap up. But check this out here. You've heard that Bitcoin is still in a bear market if you price it in gold. And of course you hear gold is going up, but Bitcoin is not. The debasement trade clearly doesn't work. Now, one, there's no debasement going on. The debasement trade is a false narrative. There's no debasement happening just yet. So hearing people say the debasement trade, when I hear that, I immediately want to deduct 100 IQ points. When I hear them say the word narrative, I deduct another 100 IQ points. But when you take a look at this, here's the long-term relationship between gold and Bitcoin. Gold has not really held its ground that well against Bitcoin ever since its inception. So we had a tiny little pop of gold against Bitcoin that was enough to give Peter Schiff an orgasm. But if you zoom out and look at the long-term chart, the history is just not there to say that gold is a superior asset. All right. I mean, you're going to tell me that gold is going to be the money of the future when you need armored trucks and guys with guns to move it? Sorry, I just don't buy it. I don't think that that's superior to something that uses code as law and can be secured with private keys. Now, another thing here is if you look at the RSI that we've experienced in the past versus the RSI that we've experienced now, it would appear that we already went through the bear markets. Let's take a closer look here at the chart at the bottom. See, this shows us the RSI from the peak of 2021, or the first peak actually, all the way to the bear market. All right. And how this looks here is that, this was, all right, this was, when was this here? It was the start of 2021 all the way to the beginning of 2022. That was the bull market last time around. And then down here, what it shows us is the 2-year time span of where you have blow off top good year and then really bad, crappy, crummy year, bear market year. So 21 and 22. That's what this one down here shows you. Take a look at right now. What do we got? I say that 2024, December, was the top because that's when everything was firing off on all cylinders and everything was going up no matter what you bought. And since then, well, we had a pretty crappy year. And take a look here at the performance and the amount of time that it took throughout the past 2 years, 25 and 24. It's the same amount of time as 21 and 22, and kind of the same price action for the most part. I mean, here was the peak of 2021 in November. The RSI was as high as it had gotten. It was the double top. This one right here, I think this was March. Had a pretty good time there, March 24. And then December 24, we had a really good time there. So that's kind of a double top there as well. And then since then, RSI had been sucking all throughout the year of 2025. And the price performance had been sucking all throughout 2025. And this, by the way, is not Bitcoin. This actually is the total crypto market cap. All right. You see this here? Sideways for the whole year of 2025. It's sideways practically for the whole past 2 years. We have practically been in a bear market with 3 separate rallies for the past 2 years. Or if you think like I did, the bull market top was 2024 December. Since then, we've been in a bear market. If you think the bear market just started because Bitcoin posted a new high later, I'm sorry, you just don't know how to read a chart when it comes to RSI. Because the way that this looks here to me is that we've been in a bear market for the past year. We got the bear market year almost all the way behind us. Just another 7 days to go. One more week. Can you last another week? Now, I do think at the beginning of next year, we have a tough 6 months ahead of us into the year. Arthur Hayes says, no, in Q1 of next year, everything is going to start being good again. I hope he's right, and I hope I'm wrong. But when I'm right about things, it's usually about bad things. And since it's a bad thing, I believe that I am right about this here. And I just know that it's going to take a long time to wash out the recency bias and the Corey Costa effect that we've been suffering from for these past few months. All right. So it will take time for recency bias to wash away. I give it 6 months, not just for the recency bias to go away, but also for a lot of the uncertainty that people have to go away. It will take some time there because, like, in January next year, yes, we get a lot of uncertainty going away about the tariffs. And then May of next year, a lot of uncertainty goes away about the Federal Reserve. We get all of that behind us here, then we can start behaving like a normal bull market. Yeah. this is something interesting here. Why do they got to print money? I'll tell you exactly why they got to print money. Take a look at this. Take a look at this. The world is running out of a working population. You see, all GDP in some way, shape, or form comes from human labor. Yeah, some comes from debt, but you need human labor to pay back the debt. So if you don't have enough humans to do human labor, you're not going to be able to have GDP growth. Now, we can't say, oh, we got AI and robots. We don't have AI and robots yet. That's why they're pissing away so much money in the CapEx spending at these companies. And I got a feeling that a lot of that money is being wasted, or it's going to turn out to be wasted, like AI just turns out to be the next metaverse. Remember the metaverse and how that nearly bankrupted Facebook and destroyed Zuckerberg, and he's no longer respectable? AI could be the same thing, because what they're trying to do is they're trying to replace something that you just can't replace, and that's the need for human labor. Until you can get a robot that can do hard work that humans don't want to do, or that these employers don't want to hire humans to do for a respectable living wage, you are going to rely on humans. And because the population of workers is decreasing, we're going to run into a really big problem for GDP. The only way to counter this right now is to use debt. And to use debt, you got to create the debt. That is printing money. That's credit creation. That is what they're going to have to rely on to carry us to an age where we can use AI and robots to fill in the labor gap, the human labor gap. You see this here? Like, we're almost at the 50% mark of how many people we need to have working for the as a percent of the overall population. Almost at 50% here. Only half the world is working, down to 55%. That's why they're going to have to print money, even if Jerome Powell doesn't want to do it, or even if Kevin Warsh doesn't want to do it if he becomes the new chairman. Hassett, well, he says he doesn't want to do it, but he wants to do it. All right. So I think that was everything that I wanted to show you here today. Okay, so remember, fiscal dominance is what matters. Oh, we got a question here. All right. Umer says, why people say after QE gold will go up, but in reality gold stops going up and crypto starts to run. Am I right? Well, let's have a look. Are you right? Does gold stop going up when QE has begun? Let's look at the last time that they did it here. Which, we could look at September of 2019, and I think we should also look at March of 2020. How did the gold price do? Best website for it is just goldprice.org. Isn't it great how you got this one internet website here that totally works and does exactly what you would expect it to do? I mean, it's not like using Google where you type something into Google hoping it will show that to you, but it doesn't show that to you. It gives you a bunch of crap that you didn't ask for, a bunch of ads. But man, it's great when the internet actually works the way it was intended. Don't you love that? I sure love that. Okay, so let's go to 2019. Yeah, so in September, they started their balance sheet expansion. Gold started going down to kind of like how Bitcoin did. But then it eventually caught a bid in December and started going up just like how Bitcoin did. And right here, we had the pandemic breakout, so it went down just like Bitcoin did. And then, when they started all that money printing, it went from $1,500 to $2,000 by August of 2020. All right. So the money printing, it helped gold go up by 33%. That should tell you that the appreciation gold has been receiving this year has nothing to do with money printing. For one, it was going up before the Fed turned the money printer back on. And two, it went up a lot less when the money printer was printing a lot more. Now the money printer is printing off a lot less, but gold is going up more. Gold going up right now has nothing to do with money printing, all right? You want to know why gold is going up? It's because of Joe Biden. That's why. And you say, well, that's okay. What did Joe Biden do? When the Ukraine-Russia war broke out, Joe Biden said, hey, Russia, your money here in U.S. banks and in U.S. treasuries, that money's not yours. We don't like what you did with Ukraine, so we're going to take all your money. We're confiscating it. They call it sanctions, all right? And Janet Yellen helped him do it. That sent a message to the rest of the world that said, oh, hey, if we got money over in the United States, particularly in their treasuries, the United States just said, hey, that money's not yours, it's ours. So we're going to dump our U.S. treasuries, which has caused the yields in U.S. treasuries to go up, by the way, and we're going to buy gold, which is why the price of gold has gone up. And when did that start? Right around the time that the Ukraine war really started ramping up, and it looked for sure like Russia was definitely going to win that war. And they are going to win that war. Let's take a look here. October 2022. I mean, we were in a pretty big contraction in everything from stocks, crypto, and metals because of the Fed raising rates. And we think that a lot of the rates still continued a little bit after this here. Been a nice upward pump since then. And if we take a look at like these big areas of green, we look at the treasury yields as well, we would also see lots of treasuries were sold during this period of time, especially in 2024, because that's just the effect of all those foreign central banks dumping their treasuries to buy gold, all right? So if we look at just the past year of action in gold, it's up to, so it added about $2,000 to its price tag from right here. Just this past year, actually, this year, it's added about $2,000 to its price tag, so that's a 50% gain practically. Or, no, it's not a 50% gain. That would be a, doing the math in my head here, that'd be like a 75% gain, because you see it's at 2,600. Hang on. Yeah, 75% gain, which it was gaining since the beginning of this year. It's only gained a little bit more when they turned the money printer on, but it had been going up all year long. So it made 75% return this past year when they only printed this much money. But then when they printed a ton of money, an absolute ton of money, it only went up about 33%. Explain that one to me, Peter Schiff. You're saying that them turning on the money printer is going to be really good for gold? I don't see that on the chart. Because when they printed about $5 trillion to a Fed balance sheet, it only pushed your precious little gold up 33%. It pushed Bitcoin up, goodness, man, what was it, 7,000%? It did a huge return from the bottom once they turned that money printer on. All right. So, good question there, Umer. Now, let's have a little talk here about next year. I mean, this isn't the last show of the year, so I got another one to make predictions on. Let's just suppose for a minute that I'm wrong. Let's suppose that even with the money printer going off next year, none of that money goes into crypto. Because that's essentially what the four-year fundamentalists are alleging, is that even though trillions of dollars are going to be printed next year, well, none of that money is going to go into crypto, or no meaningful amount of that money is going to go into crypto, because we just have to have a bear market year, because the four-year cycle declared it so. if it's the fourth year, we absolutely will have nothing but bad going on. There's just no way around it. Do I have that right, 4-year fundamentalists? That's what you guys believe, right? I mean, let's see. There's one. Actually, I'm going to share my screen here with you guys. I'll show you this here. Check this out. People are betting real money in the betting markets that Bitcoin will have a much better performance next year than gold and the S&P 500. Why would they bet real money on that? I mean, don't they know that it's going to be the fourth year and it's all over? Or maybe they're calling you out on your BS. But take a look at what price they think it's going to be. So many people here are thinking it's going to be a price that is higher than what we have now, all right? 80% believe it will be higher than 100,000. So, or they give it a 80% chance it'll be higher than 100,000, a 63% chance 110, 50% chance it'll be higher than 120. Thinking it's probably 150,000 is where it tops out at. All right. So that is the what the betting markets are saying about this. Why would they do this here if they thought it was all over, if it's supposed to be all over? Well, let's just humor those 4-year fundamentalists for a moment and say, okay, maybe you guys are right. All this money gets printed next year. None of it goes into crypto. All right? If that's the case, there's a new reality that we'll have to accept. And that's the reality that altcoins are dead forever. That will be the new reality if they do not go up next year. All of the altcoins are dead forever if they don't. Because take a look at Ethereum. If you bought Ethereum 5 years ago, or at least 4 years ago, but I think even if you bought it 5 years ago, you still lost money holding it to today. Is anyone in their right mind ever going to buy an altcoin ever again when the number one altcoin can't even produce a profit for you when you hold it for 5 years? No. No one is ever going to buy altcoins ever again if we don't have a good year next year. Because you see, the 4-year cycle is broken for Ethereum already. You didn't make any money in Ethereum this cycle because it only added 2% to its previous all-time high, and it only added it for 2 seconds. It didn't even close for the day above its all-time high previously. So nobody is ever going to invest in an altcoin ever again if we don't get some good action in Ethereum next year. Now, what I'd say to anybody right now that is holding Ethereum, I'm going to make this case here for you. Sell. Sell now. All right. This isn't investment advice here or anything. It's not really not me telling you what to do. It's me telling you what I did. All right. I sold all the Ethereum. Just like Arthur Hayes, he sold all of his Ethereum. I think many Ethereum holders should sell their Ethereum. I'm not recommending that you do that. You do whatever you want. All right. But if I had Ethereum right now, but I don't, but if I did, I would sell. Why would I do that? I want to send a giant middle finger to Vitalik to say, hey, Vitalik, stop being an idiot. Nobody cares about your mission. Nobody cares about what you want to accomplish. Nobody cares about your sustainability fetish. Nobody cares about your communist paradise vision. No one cares about that. The only reason anybody has given you any attention at all, the only reason anybody has given you money at all is to make more money. Nobody except for Fast Abdul is here for the tech. So if you do not do things that are conducive for making your project go up in value, making it appreciate, if you do not do things that are conducive to make Ethereum go beyond $5,000, we don't want to be here. We don't want to invest with you. We want to embarrass you. We want to see you fall, not just from the number 2 spot. I'd love to see Ethereum fall out of the top 10 as a giant middle finger to Vitalik so that he will get his act together, get his head out of his butt, and get to work. and fire that stupid woman that was running the Ethereum Foundation that said, "Oh, we don't really care about price. We're not interested in that. We're not interested in market price. We're interested in achieving our communist goals." So, if I had Ethereum right now, I would immediately sell it, because the terrible performance of Ethereum, and like why this message needs to be sent to Vitalik, is because this terrible performance of Ethereum can affect the overall altcoin market. I mean, if Ethereum doesn't run, altcoins are dead forever, all right? But do believe that. If we don't see any good performance out of Ethereum, nobody will ever invest in an altcoin ever again. People are going to be looking at the market. It's going to be redder than we've ever seen it. Man, I'm going to be playing this a lot.
Control yourself!
So this isn't me trying to FUD you guys out here, because you know I'm not about to FUD or anything.
Hey man, just want to let you know that sometimes you gotta shut the fuck up.
Sometimes you just gotta shut the FUD up.
Not like that. But that is how much is riding on Ethereum. And Vitalik doesn't seem to notice that. He doesn't seem to realize that. He's got to get his act together. Best way to get a message to him is just dump your Ethereum. All right. We got one more of these left in the year. We'll be doing this, I think, on New Year's Eve or maybe like the day before that or so. And give you predictions, kind of like a vision of what I see happening in 2026, how I see that playing out, and the final message of 2025. Hopefully we get a Richard Hart video for Christmas tomorrow. Man, if not, that's fine. He's given us like 2-3 videos so far this year, but it's always great to hear from him. Kind of like let us know what he thinks is going on here. But if we don't, that's all right. So I hope you have a very Merry Christmas with your families, and we'll see you next week. That's all for today. That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it